Milestone for SacOil today. Tell us what's happened so far on AIM this morning since you started listing, what that share price started at.
Oh, absolutely. Thanks for having me, Stephen. Yes, this is indeed a milestone for SacOil in our continued development. But actually, this is where the hard work starts. We actually started trading at our closing price of yesterday, which was 205 in rand terms, and we're steady at that level at the moment.
Now, this is quite a tightly held share, and you're not listing any new shares at this stage on the AIM market. So would you expect liquidity to remain quite tight in the short term?
Well, in the short term, yes, until we do a capital raise, because my expectation would be that any capital raise we would do would be largely taken up by the Europeans and UK investors, and that would create the liquidity in the stock.
Well, let's go back a step and ask why it was important, so just to refresh us, why it was important for SacOil to take a listing on AIM when you're already listed on the JSE?
Well, look, there's a number of reasons. The first and foremost is that oil and gas, as we know, is an expensive business. We have got significant support from the South African institutional investor, but the reality is that the South African institutional investor that we've tried to interest has limited knowledge and limited appetite for oil and gas. South African investors have typically been mining orientated. So if we're going to look for capital and we want to make our company a success, we need to look for capital in the global markets, and AIM is such a market. That's the first reason. The second reason is that we want to be evaluated amongst our peers, which means we need to be on the same exchange as them. We need to have analysts looking at our assets and writing up on our assets. And AIM is a market in which we can be evaluated against our peers, whereas on the JSE, we don't really have a peer. Well, and the third reason is profile. We raise our profile, so when we're talking to counterparts, whether those counterparts are people in the US or people in Europe, they want to have a see-through to our balance sheet and a see-through to our ability to execute on transactions. Certainly an AIM listing helps us do so.
Well, you talked about not having any peers in South Africa to be compared to. In fact, you're on the oil and gas subsector. The only other two companies on that are Oando and SacOil, and neither of those are pure upstream oil and gas plays. How big is the sector on the AIM market that you are being evaluated against?
I mean, in the AIM market, you've got over 20 companies. And they're playing in different regions, different jurisdictions. There's some playing in Africa, some Middle East, some North America, some in the North Sea. So there is a whole mix of companies that are pure play upstream for us to be evaluated against.
And you said that today the hard work starts. Tell us about that hard work. What are you going to be doing first?
Well, we need to underpin the fundamentals. Getting onto AIM is, as you said, a milestone in SacOil's development, but we're still intent on being an African focused, pure play, balanced portfolio upstream company. We still need to do that, but we also need to bolster our board. We need to bolster our management team from a technical perspective, and the other resources, which include capital.
Re-rating of your share price, is that likely? You're trading around just above R2 a share here on the JSE at the moment, so around R2.05. Do you expect to have a re-rating on that share price as the London market gets comfortable with you?
I expect so. I think once our assets are fully evaluated and once the London market has had the opportunity to properly have a look at our assets and evaluate them against our peers, I expect a re-rating in our share price.
Prospects at the moment, you're involved with oil and gas concessions, oil concessions in the DRC and Nigeria. How about new acreage? Are you looking at new finds at this stage as well?
Absolutely. Well, what we're not looking at is wildcat frontier exploration. We're looking for proven, undeveloped fields, and we're looking to move towards looking at production assets as well. One of the concerns South African investors always have and commentators have is the fact that we don't have production, we don't have cash flow. The South African investor typically wants to DCF or discount a cash flow stream, and we don't have that. So our ambition is certainly to acquire a production asset and to do that in the next short term, and for that production asset to potentially be in a jurisdiction other than the jurisdictions that we're already in, simply to de-risk the company from a jurisdiction point of view and also from the stage in the cycle that we're at.
When you're talking about the short term, how short is that short term? When would we expect to have some production assets in your portfolio?
I knew you were going to ask me that. I think the reality, Stephen, is within the next 2 years we'd like to have production, whether that's production that comes from our existing Nigerian assets, which are near production plays, or whether that is actually buying in a producing asset. I'll be disappointed if within the next 2 years we don't actually have production on our balance sheet.
Prospects for oil in Africa. I mean, I see you're saying that Africa expected to produce more oil this year than North America. By 2020, expected to be the third biggest oil producer in the world. How is SacOil positioning itself for that?
Well, we just want to be a contributor. We want to be a contributor towards that. The reality is there's been numerous discoveries, new discoveries made in Africa. Ghana, Uganda, Sierra Leone are all being touted as areas where there's been frontier exploration and successful frontier exploration. SacOil is not intent on being a frontier player. We're intent on actually bringing the proven undeveloped fields to production. So it's slightly further up the chain from pure play exploration, but our intent is to contribute towards Africa's production by actually bringing proven reserves into production quickly.
Robin, when would you expect to have to go to market to raise some capital, and what sort of appetite for your equity do you anticipate from the London market?
Well, look, I was on a roadshow, a no-deal roadshow towards the back end of last year, where I was really just telling the story of an African upstream company. And it's not a new story. It's a story that has been done before and successfully done before. So it's understood in London that it is possible that an African company, an African-born company, can become a significant player. There are many examples that can be pointed out. In terms of the appetite has been real, and it hasn't just been real from a London perspective. It's also been real from a North American, Singapore, and a Dubai perspective. So the interest is certainly there. When will I actually go to market to actually raise the funds? I think I've got obligations that are coming up in terms of the acreage we have. We want to fast track that acreage. So I would expect in the next short while, certainly in 2011, to go to market to look to raise the cash to expedite the assets that we have.
Robin, you mentioned being an African-born player. Do you think that gives you an advantage in Africa, particularly where we're seeing growing indigenization laws on the continent? Do you think being African gives you an advantage over some of those global players playing in this continent?
Absolutely. I've got zero doubt on that. The fact of the matter is that when I travel out through Africa and talking to the new African leadership, there seems to be more and more of a desire for energy security. And energy security really talks to them actually allocating acreage and assets to first prize indigenous local people, introducing indigenous local people into the oil and gas industry. But second prize is very much introducing an African player. The reality, as I mentioned before, Stephen, is that oil and gas is an expensive business. Local companies, local indigenous companies might not have the capacity or the structure to go out and raise the capital that is needed to exploit the acreage. Where we play, where SacOil has an advantage is being South African based. There's still an attraction from the continent to do business with South Africa. But most importantly, we do have a capital markets that work. We have institutions that do invest to a limited extent. And that lends itself to us seeing transactions. Deal flow is not my issue at the moment. I see numerous transactions across the continent. What is the issue is being able to pick the wheat from the chaff, and hence enhancing and bolstering our management team and our internal capacity will enable us to better ascertain what is real and what isn't.